Welcome to another case at Perspectives Eye. Imagine a customer purchasing a high-end camera online for $1,200. The customer, after receiving the camera, decides to contact the bank and claim that they never authorized the transaction or that they never received the product. The bank initiates a chargeback, and the merchant is required to refund the $1,200, and the customer keeps the camera. Welcome to the digital age where convenience often comes at a cost. Today, we are diving into the world of chargeback fraud. This video is divided in three parts. What is chargeback fraud? The impact on business, and protecting yourself from chargeback fraud. Before we start, let's get clear that many chargeback fraud cases happen or occur because consumers are not familiar with how chargebacks work. Sometimes customers do not know that they should contact the merchant for a refund instead of asking the bank for it. This can cause unnecessary chargebacks when a simple refund would have been enough. Also, misunderstanding of refund policies is another common cause of chargeback fraud. To prevent fraudulent chargeback requests, merchants should have clear and easy to understand refund policies to avoid confusion altogether. What is chargeback fraud? Chargeback fraud, also known as friendly fraud, occurs when a consumer makes a purchase using a credit card and then requests a chargeback from the issuing bank after receiving the goods and services. This is often done with the intent of receiving a refund while retaining the purchased item or service, therefore defrauding the merchant. Do not forget friendly fraud, where consumers falsely claim that they did not authorize a purchase. Triangulation fraud, where criminals use stolen credit cards information to buy goods, then initiate chargebacks even before the goods are shipped. Chargeback abuse. Businesses are targeted with a high volume of fraudulent chargebacks to damage their reputation and finances. Now, while chargebacks are a legitimate consumer protection tool, they can be exploited by criminals. Now, the impact on business. Chargeback fraud can have a devastating impact on businesses, resulting in financial loss. They will suffer financial loss when they must refund the payment while losing the product or service provided. Damaged reputation. A high number of chargebacks can damage a business's reputation, and this will affect them with banks and payment processors, potentially leading to higher fees and/or account termination. Increased costs. Chargeback fraud can lead to higher processing fees and penalties from payment processors. For businesses, chargeback fraud is a constant battle. Transaction monitoring is a vital AML or anti-money laundering measure for reducing chargeback fraud. It involves monitoring and tracking transactions for suspicious activity and identifying patterns that suggest fraudulent behavior. Additionally, reporting suspicious activity is crucial in anti-money laundering procedures. Businesses must report unusual transactions or behavior indicating fraud to regulatory authorities. Reporting these activities help prevent additional fraudulent actions and lowers the risk of chargeback fraud. Before we continue with the third part, if you like this content, please subscribe to our channel, give us a like in this video, and also leave a comment so that we can become a better provider of content for you. Protecting yourself from chargeback fraud. While it is impossible to eliminate chargeback fraud entirely, businesses can take steps to mitigate risks, such as establishing clear policies and communication with customers. Clearly state returns, refunds, and exchange policies on your website or at the point of sale. Ensure that your customers acknowledge and agree to these policies before completing a purchase. Detailed and accurate transaction records. Keep detailed records of transactions, including order confirmations, shipping details, and communication with customers. Use delivery confirmation and tracking for shipped goods as well. Enhanced payment verifications, use address verification systems, also known as AVS, and card verification values as your CVV checks to verify the legitimacy of transactions. Also, implement multi-factor authentication for online transactions. Maintain, and involving customer communication, maintain open and responsive communication channels with customers to address issues promptly. Send clear and detailed receipts or invoices for all transactions. Monitor for fraud. Use fraud detection tools and services to monitor for suspicious activities and patterns. Set up alerts in high-risk transactions or repeated chargeback requests. Dispute chargebacks. Actively dispute fraudulent chargebacks with comprehensive evidence and documentation. Respond to chargeback notifications promptly and adhere to deadlines. By adopting a proactive approach, businesses can reduce their vulnerability to chargeback fraud. Chargeback fraud is a complex issue with far-reaching consequences. By understanding the tactics that are used by criminals and implementing effective communication and countermeasures involving these tools that you're going to set in place, businesses can protect their bottom line. Training staff regularly is crucial for effective chargeback prevention and management. Educating your team on chargeback processes, common causes, and prevention best practices is important. Your employees should also learn how to handle disputes, respond to chargeback requests, and communicate effectively with customers.